Here's a look at the stocks. The Dow is down 1,100 points.
Boy, joining us now with more is financial expert Terry Savage. Terry, what's going on?
We are having a global rout. They say, oh, well, it was the unemployment news on Friday. Well, we didn't see huge, massive layoffs. We just saw not a lot of hiring. But that number, that statistic of jobs created and lost, came in a little weaker than expected. And that was a culmination of a lot of bad news percolating through the economy in recent weeks. And that was news about the Institute for Supply Management and home sales, and even McDonald's reporting lower earnings because consumers are worried. And all of a sudden, over the weekend, that coalesced. It started in Japan, where they raised their interest rates. That triggered some international buying and selling kind of a thing. So the Japanese stock market fell 12%. It has spilled over here. Interest rates, as people rush for safety, interest rates have gone down, buyers of our treasuries. So for an example, all you chicken money people, the 6-month T-bill, which last week was yielding about 5.1%, is now about 4.7%. That's okay. The rates will be lower at the auction, but you will not lose any money on those. Mortgage rates coming down dramatically because of this fear of an economic slowdown and recession. And suddenly mortgage rates have gone not only just under 7%, but down to 6.4%, opportunity to refinance. And the rest of the world is saying, what's safe? The US dollar is safe. Gold is down. I'm just looking at the latest numbers, $40 an ounce, but to $24.27, it's still way up there. Bitcoin is down. Bitcoin is down to 50,000 right now. So anything that was speculative, anything that was over-enthusiastic, from the chip stocks to even the banks, will they be exposed if consumers have a lot of debt? There's just an emotional sell-off this morning, and that's the way markets work. So it makes for scary headlines looking at the market now down almost 3% on the Dow.
Yeah, despite the scary headline and down 1,100 points, I'm hearing threads of what sound like good news, Terry. Are you expecting a recession, or is this just a weird blip?
Actually, I've been writing about the possibility of a recession for a couple of months, and people have looked at me, well, actually more than a couple of months, but I've talked about it for much more than that. And the economy's been remarkably resilient. In June, I posted a column called Dangerous Stock Market Complacency about the fact that people in retirement or nearing retirement have all their eggs in this one stock market basket, and we forget the history and we think about what's most recent. Stocks always go up. We recovered from the pandemic lows dramatically, and at 40,000, we're at 38.5 now, but around 40,000, we're near all-time highs. This only is a dangerous situation for someone who is retired and who needs to take distributions or money out to live on. Those people, I've been warning, should build up chicken money. We will survive this, but we've forgotten what bear markets look like. If this turns into one, an official definition is down 20%. I personally lived through 3 bear markets that have approached 50%. So the point is that you need to have some money on the side if you're not young and not worrying about, if you're in your 30s, 40s, 50s, you've got 20 more years of contributions to your retirement account. So the money you put in, the $300 that comes out of the paycheck, it's going to buy bargains when it does. Don't chicken out of that. But for those who are living and have now, I just posted a column on target date funds. They're exposed to the stock market. You have to be aware that markets can go down dramatically. We just haven't seen that in a while. We're seeing it today.
All right. You can always ask Terry a question on her website, terrysavage.com. Thanks for joining us.
Thank you.
Thanks, Terry.
Thank you, Terry.
Hey, Morgan.
Hey, some good news that